Ladies and gentlemen, good day and welcome to BCL Industries earnings call for Q2FY25 conference call hosted by InCred Equities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nitin Awasthi from InCred Equities. Thank you, and over to you, sir.
Thank you, Joshua. We thank the management of BCL Industries for giving us this opportunity to host their call today. From the management, we have Mr. Kushal Mittal, Joint Managing Director, along with their IR team represented by Priya Sen of Go India Advisors. I now hand over the floor to Kushalji for his opening remarks. Over to you, sir.
Thank you, Nitin. Welcome everyone to the Q2 and FY25 earnings call for BCL Industries Limited. The financial statements and investor presentation have been made available on the exchange, and I trust that everyone has. With over 4 decades in grain processing, BCL Industries has become a leading producer of grain-based ethanol and DNA in the country. The strategic decision to diversify into the distillery segment, leveraging expertise in grain processing, has shown positive results. Currently, BCL operates 2 distilleries located at Bathinda in Punjab and Khadak with a combined capacity of 700 KLPD. I am pleased to announce that the recently added 100 KLPD capacity at Pusha Distillery has reached full utilization and operations are running as planned. As part of the expansion strategy, BCL has recently acquired Goel Distillery Private Limited, which is located in Fatehabad, Haryana, and possesses the necessary land and permissions for establishing 250 KLPD grain-based ethanol unit. Goel Distillery is now a wholly owned subsidiary of BCL Industries Limited. This acquisition will enable the company to set up additional 250 KLPD ethanol plant along with the power plant that will use paddy as its primary fuel source. With land and clearances already in place, this plant can be commissioned in nearly half the usual time. This move is expected to significantly strengthen BCL's position as a leader in the grain-based ethanol manufacturing sector in India. The 250 KLPD ethanol, the company to set up a biogas plant with a capacity of 20 metric tons per day on the newly acquired 9-acre plot near its Hyderabad unit, where approximately 250 metric tons of paddy straw will be processed daily. This initiative reinforces BCL's commitment to green energy solutions. Additionally, a new 150 KLPD unit is expected to come up in the coming times in Bathinda, bringing our total capacity to 850 KLPD. The focus on using maize as a primary feedstock for ethanol production and paddy straw as fuel distinguishes BCL in terms of operational efficiency and sustainability. Aligned with the Government of India's focus on green energy, BCL is also establishing a 75 KLPD biodiesel plant in Bathinda. Work on the 75 KLPD biodiesel unit in Bathinda is going on at first swing, which once completed will facilitate complete vertical integration and increasing value addition in ethanol production. Maize oil will be the main raw material for this unit. BCL's country liquor brand has shown robust demand with 852,341 boxes sold in the first half of 2025, a trend that is expected to continue. In the edible oil segment, despite market volatility, BCL has maintained stable performance and the phase exit from this business is progressing as planned. This move allows the company to focus on high-end segments, ensuring strong returns. Additionally, the existing real estate inventory is being gradually sold off with proceeds directed towards debt reduction. Moving on to the financial performance for Q2 and H1. The company has shown strong performance across the board. For Q2, BCL has delivered a strong result with total revenue touching at rupees 748 crores, marking a 55% year-on-year increase, while EBITDA stood at 57 crores with an 8% margin, up 16% year-on-year. That came at around 30 crores, up from 20 crores in Q2 of the previous financial year, reflecting a growth of 50% and a margin of 4%. The distillery segment demonstrated robust growth, with ethanol volumes growing by 73% to 50,914 KL. Revenue from the ethanol segment reached to 362 crores, a remarkable 95% increase year-on-year. Distillery segment EBITDA touched to 52 crores, a 16% increase over the year-on-year. This now concludes my presentation. We'll now do any questions or answers. Any questions?
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Advait Patil from Finterest Capital. Please go ahead.
Hello, sir. So I had a couple of questions, starting with what is the status and projected completion of the 75 KLPD biodiesel plant?
So we planned to be commissioned in April or May of next calendar year.
Okay, and what strategies does the company have to address the challenges, that is posed by rising maize prices?
See, as a company tend to, always find solutions to problems. So one of the things that this quarter, which will definitely differentiate us from our peers, for quarter two I'm talking about, is that, Punjab has a maize for which there are very few buyers, usually. We have our own buyers in place. We were the only ethanol-based buyer for this wet maize in the market, and we are at very competitive rates. So that has helped us.
Right.
We have a vast of sellers and traders, and we've had a very long relationship of over 4 decades working with some of them, and that plays to our benefit also. So it's always innovating, seeing where the crop is coming and planning accordingly.
Mm-hmm. Got it. And do we have any initiatives that are in place to improve margins in the distillery segment?
See, margins currently as a standalone ethanol business, we don't foresee a great increase from the current numbers are showing. But the addition of biodiesel will definitely help our margins, because that's complete vertical integration and provide a great valuation which will help increase the overall margins of the business.
Okay. So, and how will BCL's exit from the edible oil business affect its position financially?
I'm sorry, your voice is cutting.
Yeah. Am I audible? Hello?
Hello?
Am I audible?
Yes, now you are.
Yeah. So I was asking, how will our exit from the edible oil business affect our financial position?
How will our exit
from the edible oil business affect our financial position?
See, of course, the revenue will decrease quite a bit. But the overall profitability of the company, we don't expect that to decrease significantly, because since edible oil business is a low margin business, so and with the addition of biodiesel, we are hoping that our profitability doesn't come down. But yes, it will have an impact in our revenue numbers, of course.
And what portion of actual ethanol production is the company able to sell As in, additionally, what is the portion that we are also using for captive consumption?
No, ethanol is not doing anything for captive consumption. It's all being sold to the OMCs, and the ENA is being sold to the bottlers, and some is being consumed by us for our own bottling purposes.
All right. Thank you, sir. I'll get back into you.
Thank you.
Thanks, sir. The next question is from the line of Narendra from Robo Capital. Please go ahead.
Sir, am I audible?
Yes.
Yeah. Hi. Thanks for the opportunity. Congratulations on a good set of numbers. So my first question is regarding our oil business, right? Where are we in the stage of liquidating that business as to how much of inventory is left, and by when can we see the revenue stopping from this business?
See, currently, as I speak, there hasn't been a significant decrease operations. Yes, the oil mill is now shut. The solvent also is not operating now, but the refinery is currently being operated as per the market demand. We've seen a good demand lately with the increase in duty, so that has positively affected us, and also it's being effective season. So currently we're rating that to the market demand. So we are hoping to exit out of this business by Q4 or maximum Q1 of next financial year, or Q4 of. But right now, since the government very recently of imported edible oil, so that's working in our favor currently.
Okay. So would it be fair to say that this year we could see around 800 odd crores of revenue from edible, and next year there would be no revenue from the segment? Would that be a fair assumption?
For this year, I don't want to give any figures right now. We had a good quarter. The edible oil business is operating normally, but I don't want to give any specific numbers.
Okay. All right. So we will see revenue till Q4 from this business, right?
Right.
Yeah. Okay. And second, on our distillery operations, right? So if I'm not wrong, we had a target of around 1,700 odd crores of revenue this year. But given that we have already done about 1,000 odd crores in H1 from the distillery itself, more than 1,000 crores, I suppose. Is it that we are giving a conservative kind of a guidance, and would it be possible to touch the 2,000 crore mark from this segment this year?
See, the numbers I usually give are conservative in nature. I will stick to my 1,800 figure because sometimes there's a shutdown that might be needed for any repair or overall. So I'd still stick with my 1,800 figure.
Okay. Understood, sir. And when do we expect that 150 KL plant to come in, and also the new acquisition that we have done, right? So that 250 KL, when do we expect to come up?
The 150 KL currently the workings are going on to finalize an order. The same. That we are expecting once the orders are placed another 12 months from there on. I'll give one more clarity once these orders are placed. But to be very conservative in nature, because right now no orders have been placed. We're still finalizing because we're also exploring the possibility of biogas. So we're exploring that as well along with the distillery. So our plant has to be planned accordingly. So for that, planning is taking a little while. So just to be conservative and to give a timeline, we are saying the financial year of 27-28 Q1 as a start date, which would decrease depending on when the orders are placed.
Okay. And the 250 KL plant, sir?
Yes, so that I just mentioned for the 250 LTD.
Sorry, I did not get you.
For 250 KLPD at Goa Distillery, we're saying, financial year 27 to 28.
So both so 150, we are waiting for the orders to be placed, and the 250, you are saying that it will be in Q1 of 28, right?
Yes. So 150, once the orders are placed, which, we were hoping to finalize that in the month of November. So 12 months from there on.
Okay. Understood, sir. And one last question, if I could squeeze in. If I'm right, we had some plans to enter other segments in this green energy space, right? So, any update on that?
Yes. So yes, as I mentioned, we're proposing to set up a biogas plant, which is a bio-CNG made from barley straw. And this is a new technology. I'd say there are a few pilot projects that have been installed, so we're talking to the companies to see who has the best technology in the market. So that would be our next step into the green energy space.
Okay, great, sir. Thank you so much, and all the best.
Thank you.
Thank you so much. The next question is from the line of Dipesh Sancheti from Manya Finance. Please go ahead.
Hello, Kushalji. How are you?
Good, thanks.
Okay. My first question is regarding what is your expectation for Diwali? Will the government gift you with gift all the ethanol companies by maintaining the same prices or by increasing the ethanol prices from maize? What is your assessment?
See, I can't speak with full conviction since this is not my place to decide. So it's really tough to say if there will be a price increase or not.
Okay. No, the reason I asked is because a lot of sugar companies were trying to give example of maize and trying to increase their prices or to get maize at par with sugar. That is the whole point which I was trying to make.
See, the price of ethanol is derived from the raw material, and the price of the raw material and the recovery from the raw material. And accordingly, the government has placed ethanol. Again, I can't make any comments on it.
Okay, no problem. Okay, what is the reason of the dips in EBITDA margin in the distillery segment this quarter?
Yes, of course. Maize prices have increased in the market, and that is the primary reason.
What are the maize prices for this quarter?
There have been a huge variation in them. I'd say, because we also secured a lot of wet maize, it was quite competitive. I think the average for the quarter could be anywhere close to between 24 to 25 rupees.
Okay, and the current maize prices have, I think, come down, right? 23 around?
No, currently maize prices have increased from there on, but we expect a decrease since big crop is due after Diwali in MP, Rajasthan, and some part of Jharkhand.
Okay. And coming on to what is your assessment of the impact of the Punjab government's July 2024 initiative to restrict retailers to only 1,000 cases of MFL per month on country liquor? Will it affect our operations in Punjab or in general?
I'm sorry, I'm not aware of this decision. I think it's IML, PML, wherein Punjab made liquor, so it should not impact us. Our business has not been.
Hello?
Yes. Can you hear me?
Yeah, I can hear you now.
Yes, so I'm not aware of what you're referring to, but regarding PML has not been changed. I think what you're mentioning relates to IML. We are in the business of PML, so our business is usual.
Okay, fine. No problem. And what are the realization of ENA and ethanol from the Punjab and the Kharagpur distillery?
See, quite similar in both the states as of now. ENA prices are hovering around between 71 to 72 rupees, and ENA prices are also, ethanol prices are of course the same in both the states, and even we're experiencing similar maize prices in both the states.
What are the ENA prices, if you could repeat?
It's between 71 to 72 rupees.
Okay. So almost ethanol and ENA, we are getting the same realization.
Right.
Great. Okay. And regarding the capacity, so basically we are expecting about 850 KLPD of capacity with our Bathinda plant coming up. We will have 850 KLPD by FY26. And by FY27, we will come to around 1100 KLPD with hopefully the new acquisition also coming in line. So that will take us to almost number 3 player. Is that assessment right?
The 250 was currently giving a timeline of 27-28.
Okay. So even if it is FY28, by FY28 also, that will take us to the number 3 player almost.
Okay.
Assuming that rest of them also do not have a major expansion.
Right.
Right. And is there any timeline for the biodiesel plant also in Bathinda?
Biodiesel, as I mentioned, we're targeting for April, to go until May of next calendar year.
Okay, April or May of 25. Fine. And your biogas, bio-CNG, it is still under the R&D stage, or have we, got any, what is the development on that?
Yeah, there are few companies which have set up some projects. We're sitting with them and taking a look to see who to go on with. But yes, the technology is new. There are some challenges as we speak. But yes, it should mature in the coming times.
Great. And okay, if there's any other question, I'll come back in line. And all the very best, and congratulations again on great set of numbers.
Thank you.
Thank you so much. The next question is from the line of Ankul from Invid. Please go ahead.
Yeah. Hello. Am I audible?
Yeah.
Yeah. So my first question is what is the projected realization from selling edible oil assets, including the brands and the land?
I'm sorry. Can you repeat the question?
Yeah, my question is what is the projected realization from selling the edible oil assets, including the brands and the land?
See, I have mentioned this earlier. We don't expect any realization from selling brand, because there has been a strong consolidation in the edible oil market, with the market coming into 2-3 big hands. So we have not taken any such figure. For land, it's tough to say at the moment. It's a valuable piece of land right in the heart of the city. So, we haven't really marketed the piece of land yet. So once the operations are shut, we should have more clarity on that.
Okay, got it. And what is the estimated, if you can give any real estate value of the edible oil plant in Bathinda?
Let's have to comment on it.
Hello, I can't hear you.
I said it's tough to comment as of today. Once the plant is shut, the machinery has been displaced, has been removed from the location. It will be easy to comment.
Okay. And what portion of FY24-25 power demand will be met in-house and by external sources?
I'm sorry.
What portion of FY24-25 power demand will be met in-house and external sources?
See, our distillery operations are all our power is being produced in-house. So the only unit where we're buying power from the grid is the edible oil unit. Bring that down at the end of this financial year. So all our power requirements moving forward will be in-house.
Okay, got it. And just one last question, like if you can provide any ballpark figure for the breakup of the ethanol and the ENA produced in both the plants at Savaksha and Bathinda plants.
ENA, because I think mentioned in our presentation, let me just look at what page that is so that you can take a look.
Like any ballpark?
You can see that on page 21 of the presentation.
BCL. Okay. Yeah, got it. Yeah, that's all are my questions. Thank you.
Thank you. The next question is from the line of Bala Murali Krishna from Oman Investment Advisors. Please go ahead.
Yeah, good evening. Hope I'm audible.
Yes, good evening.
Yeah. So regarding this oil distillery, so we have press release that everything is in place, but we thought that it will take very less time to establish that to take KLPD, but we are thinking.
I'm sorry, your voice is not clear.
Yeah, regarding this oil distillery acquisition, 350 crores acquisition, if everything is in place, so maybe we can plan a commissioning it a little bit earlier, but now we are planning in FY28. So is it
I've already mentioned that, it's a very conservative timeline. It is likely to decrease, but I prefer giving a figure timeline right now, which is conservative in nature, and then giving you more clarity once the orders are in place. Currently, we are still planning. As I mentioned, the power plant needs to be planned accordingly because we're also proposing a biogas plant here. And biogas being new technology from paddy straw, we're still exploring, and we want to make the right decision. Hence, the conservative timeline.
And just follow up on that, the funding, how it will be funded through internal accruals or any debt will be planned for this one?
For that also, it's currently options are being explored, and I can give you more clarity in the future.
Okay. And 150 KLPD, it will be commissioned by FY26 Q3, from 1 year from now onwards, right?
I can't. I'm sorry. Can you please repeat the question?
150 KLPD, Bathinda. So it will be from 1 year from current month we can plan commission.
Yeah. So we're hoping to place the orders very soon, and 1 year once the orders are placed for the machinery.
Okay. And maize price, I think as you mentioned that it's between 24 and 25, and we are using that wet maize also. So in the current quarter also, we can expect the same scenario?
No wet maize is available in the market currently, and current prices are higher than the mentioned prices, but expecting a correction in states across the nation.
But is it possible to guide on margins? We can maintain same margins in Q3, or we can expect any deeper?
We don't expect the margins to increase from the previous quarter. We're hoping to maintain the same, but more clarity will be done once the crop is in, because which were not due at this time, so the harvest has been delayed. So post Diwali crop to come in, and then on we'll see what effect that has on the maize prices.
Okay. On bookkeeping, this quarter we see finance cost is decreased by 5 to 6 crores. So that is what impacted the bottom line increase. So
really having my voice is not clear.
Yeah, I think your voice is not clear since the call started. Okay, I will come outside. Okay, and regarding finance cost, in this quarter, we see 5 to 6 crores decrease in finance cost. So that is contributed to more PAT level. So what is the reason for that? And going forward, we can see the same amount of finance cost?
Are you talking about decrease in the finance cost for this quarter?
Yes. 5 to 6 crores decrease as compared to last quarter.
Yes. So the decrease was because we had received our interest subvention funds. So there's usually a quarter or two delay. We receive them, so that's the reason for the decrease this quarter.
So next quarter, again, we can expect more 5 to 6 crores of more finance cost, right? Hello? Hello? Hello?
Hello?
Hello?
Yes, can you hear me?
Yeah, now I can able to hear you.
Yes. Sorry, did you have a question?
Yeah. So, I mean, so in this Q3, so the finance cost will be similar to Q1, right? This 5 to 6 crore decrease won't be there in Q3, right?
It depends. If we receive our interest subvention funds, yes, there could be a decrease. It just depends, because there's usually 1 or 2 quarter delay when we receive funds, and we account for the interest subvention funds upon receipt. So that is the variation.
And lastly, on this Swaksha distillery order which we won from OMCs, there is 1,300 crores order around, but 300 KLPD could give only maybe 800 crores of ethanol, right? So how will we fulfill that order, 1,300 crores?
1,300 crores? About 13 crores.
12.5 crore later, something like that.
That unit is also the capacity will be used for the production of ENA.
I mean, what I want to see that the order quantity is more as compared to the production quantity. That's what I am telling.
Is my voice? I don't know. I'm having a lot of trouble hearing. I think is it a mic connection issue or?
Yeah, I think its line is not clear from your side. See, because we have an order of 18.25 crore liters of ethanol. So if we multiply it approximately 71 rupees, so it is becoming 1295 crores of order. So normally from 300 KLPD we can go up to 800 crores of 800 crores value of ethanol only. No? So
no, I think as I mentioned, 300 KLPD is both ENA and ethanol. Need some capacity to be left for ENA production. So hence that was how the allocation was given for ethanol. Both our units, BCL and Swaksha, have both ENA and ethanol.
It's okay, fine. Thank you. That's all from my side.
Thank you. The next question is from the line of Ankit Minocha from Adesi Ventures Family Office. Please go ahead.
Yeah. Hi, good evening. So my question is with regard to more strategic look into the business. So, I mean, if I look at the edible oil business, I understand that the plan has been to sell it for a long period of time. But now with these new duties coming in, I believe 800 or 700 of the 1,000 liter per MT per day capacity is not refining, but it's actually production. So you could see good margins and good profits from potential price increases that you might get in this business. So I wanted to understand what is the management thinking with regard to this divestment still? And is it, tomorrow if this trend continues structurally, do you think you might also continue to do this business and probably sell later at a better valuation when the business looks better?
We're still looking to disinvest because one, the current improvement in business has been due to the change in duty structure. As I mentioned, the government, the duty on imported oil all of a sudden by about 20 to 25%, which was not expected and led to increase, which benefited us as a company. But we've seen in the past, as per our experience, there is no consistency in the policy. So hence we will be looking to disinvest. And also since our factory, the city now, getting the pollution clearances, NOC moving forward. So it's not, our business will not be sold as business because there won't be any buyer for this factory. So it will only be scrapped. And also it's a unit that is very old. So regardless of the policy, we are looking to disinvest.
Okay. And by when do you think that the revenue and the profit then from this business will go to absolutely zero?
By Q1 of financial year at the latest.
Until Q4, it should be running at optimum capacity?
No, we'll be moving, decreasing slowly. Given the current market scenario, it makes sense for us to, decrease it as now because it is a good time to be in the edible oil business after a long time.
Okay. My second question is on the raw material side. So, firstly, with the movement down that is now happening in maize prices, or also maybe if rice prices come down, do you see the chances of inventory losses in the next quarter?
No, I'm not aware if rice prices have decreased. They have only increased in the recent past.
Okay, and assuming a good paddy crop comes in that case, do you think say there is a big disparity between the profitability between rice and maize ethanol, or do you have the flexibility to move to rice-based ethanol, or it is not possible at all?
No, of course the unit used to run on rice for the longest time. It's always easier to produce ENA or ethanol from rice. So depending on the market, we can always flexible. And it's not that we are, adamant that only produce our spirit from maize. If rice is more profitable, if there is any arbitrary, take advantage of that.
And if you decide to make that turnaround ever, how much time does it take you?
It's a matter of day. It depends on the deal.
Okay, fair enough. And finally, if you could just, because I believe I'm hearing from certain other places, 1750 crores in guidance. I believe that's only on the ethanol. If you could just give us indicative numbers for what do we think will be revenue for revenue guidance for this year, and what would be operating margin guidance for this year?
We expect full 700 KLPD capacity utilization from the distillery sector. So not just ethanol. It has ENA, ethanol, DDGS, CO2, country liquor. So about 800 odd crores from this sector. And, edible oil business, we expect this trend to continue. And margins should be around the same from what we've seen in the first half.
So if I understand correctly, around 2,500 crores of revenue and around 8% operating margin?
Yes, as per the past 2 quarters, yeah.
Okay. Thank you very much. Just a bit of feedback. I mean, I understand the decision has been taken on the edible oil business, but I mean, considering the capacity constraints that the industry is facing, and also considering this approach that the government is now taking to promote the farmers, don't you believe it might be better to wait to sell the business? I mean, obviously it's a strategic decision.
See, Punjab is no longer a region that is focused on edible oil. So even if we continue it, and even if government focuses on indigenous oil, there are better states to do business in. So that's why the decision was made to exit out of this business and to focus on green energy, biodiesel. We expect that should be better value addition.
Okay, fair enough. And the value that you're putting to this.
Also, our unit is right in the. So we don't expect our NOC to be NOC from pollution board. They much longer, so it makes sense.
Right, and the value that we were assigning to this real estate was upwards of 400 crores. Am I correct?
No. I've never given such a figure. 400 crores. That is very high, and this is 400 is nowhere close to the actual figure for the real estate.
Okay. Thank you very much. Okay.
Thank you so much. The next question is from the line of Dipesh Sachiti from Manya Finance. Please go ahead.
Hello, am I audible?
Yes.
Yeah. Okay. My first question was regarding how do you see the opportunity in biodiesel going ahead?
See, of course, we create an opportunity from the biodiesel sector. There is a 5% blending mandate in the country, and the current blending rates are less than 1%. The last blending rates that were released were at 0.3%. So, of course, there is a huge demand, and 5% blending mandate is only just the start. So we're quite bullish on this sector first. And also, since our raw material is majority of our raw material requirement is indigenous, so that should also play to our benefit, because we're extracting oil and there's no hampering our ethanol production, and is only value addition in terms of biodiesel.
Right. So the biodiesel will be value accretive as well as margins also will be higher. Am I right in that assessment?
Yeah, the overall margins of the business should increase once biodiesel has come in.
Okay. So apart from the 75 KLPD which is starting in Bathinda, are you even planning to do something in Kharagpur?
Yes. So we have permissions to publish similar unit at Kharagpur. We're awaiting the clearances and.
Okay. So, is there any peer of ours who's also doing anything in biodiesel, or we are the only company which is doing biodiesel?
See, biodiesel, if there's a company that's producing biodiesel, mother oils, that's not much of a competition. We have our own indigenous oil as raw material, and as I mentioned, there is a huge demand for the same in the country. And I don't know if any ethanol player is thinking on the same line. So I think we'll be the first ones to do this.
Wow. Oh, okay. So we'll be the first ones to have such a big capacity, and going ahead also we are expanding on it. Great. Okay. And and how do you see the blending going beyond 20% in ethanol? Do you think it's a peak capex cycle, or do you see more opportunities going ahead?
No, I think beyond. The government has formed a committee to Niti Aayog to come up with a policy on how flex fuel engines will work and what should be the blending beyond 20%. So we're awaiting their report. Yes, we expect that ethanol demand should increase further beyond 20% with engines, and the overall blending rate increase in the country.
Great. Okay. I could see in your presentation that currently your ENA, we have produced less ENA and more focus has been on ethanol. Going ahead also, you see the similar trends going on, or depending on the pricing, will be flexible in producing ENA or ethanol?
We're always flexible depending on the ENA demand in the country. I think in the coming times, we're expecting the ENA production in the Bengal to increase slightly from the previous levels. But that's all. We're always flexible depending on the supply-demand situation.
Okay. And most of the plants are flexible in that case. I think only your Bathinda one, which is on subsidy, that is not, that is only ethanol, pure ethanol plant. Otherwise, the rest, all the plants are flexible?
So Bathinda, out of the 400 KLPD, there is flexibility to produce 200 KLPD of ENA. And for Kharagpur, that is a 300 KLPD plant, but we have the flexibility to produce up to 200 KLPD of ENA there as well.
Great. And the new capacity which is coming, 150 KLPD, that will be flexible or that will be purely ethanol?
That's only ethanol.
That's only ethanol. And the 250 KLPD which we have acquired, what about that?
That's only ethanol.
Too soon to say.
That is only ethanol. The clearances are there. See, to get an ENA license is very difficult. There's a lot of red tape. That's why you see most of the plants that have come up in the country right now are dedicated ethanol plants, as getting the clearances for them are relatively easier. So the licenses in place for the Goel distillery are also to produce ethanol only.
So at any time we can have 400 KLPD dedicated for ENA. In case the prices shoot up a lot, we can have at least 400 KLPD for ENA and the rest will be for ethanol. Is that the right assessment?
Right.
Great. Okay. And I'll fall back in line if there's any other question. Thank you so much again.
Thank you.
Thank you so much. The next question is from the line of Shashank Agarwal from Individual Investor. Yeah, you may go ahead.
Hello.
The next question is from the line of Neeraj from Individual Investor.
Hello. Can you hear me?
Yes.
Yeah. Thank you for the opportunity. And first of all, congratulations on the great set of numbers. When the whole industry is in turmoil because of the rising raw material price, you and your team has managed to perform very well in this quarter. So my first question is, what is your per liter power cost? Can you please share that?
Per liter power cost, because in Bathinda it is significantly lower as compared to our peers, because of our usage of paddy straw. So, in Bathinda we calculate this as around 3 to 4 rupees only, whereas the industry standards are anywhere close to 6 to 7. For our Kharagpur unit, it's a little more than that. I'd say it's around 6 rupees, 5 to 6 rupees.
Okay, that's good. Next question. So last year, you had procured some machinery for ENA production, right? And initially you were planning to revamp the ENA machinery,
right,
which required around 2 to 3 months of plant shutdown. But you decided to postpone because there was overwhelming demand for ENA, and you didn't want to shut down then. So, what is the plan regarding that? Because if I understand correctly, the machinery was already sitting in your plant, right?
Yeah, you're right, Neeraj. Actually, we're still experiencing good demand for ENA. So we're not planning a shutdown right now or in the future as well. What we are exploring is how to, if we're speaking with the suppliers, if this machinery can be utilized for our 150 KLPD ethanol expansion or not. Because right now with the ENA demand, we really don't want to shut down our unit.
Yeah, that makes sense. Okay. And given that the realization for ENA is very good, and if I understand correctly, producing ENA is cheaper than ethanol because of the lower alcohol concentration. So does it make sense to produce more ENA provided there is enough demand? So is there a plan to ramp up the ENA production?
Yes, that all depends on the demand. So if we see a greater demand, we will increase our ENA production, and that's decided on a month-to-month basis, where we receive our orders for ENA at the start of every month. So in the winters, usually we expect a greater demand for ENA as opposed to the summer season, where beer consumption increases. So depending on the demand, the production of ENA can be increased at any time.
Okay. And I noticed that your working capital loan has decreased by around 90 crores this quarter compared to the last. So is that because of the interest subvention money that you received?
No, the interest subvention money does not. Actually, this quarter there was no harvest happening. No big harvest happening. The only big harvest happened was in Punjab. So we were not sitting on a huge pile of raw material. Hence the decrease in the working capital.
Okay. And sir, you mentioned previously that generally the maize harvest is throughout the year except this 3-month window of around June to September, right? So, what does BCL do? Do you have the capacity to store inventory for these 3 months where no harvest happens?
No.
We
try to study the market inside our factory premises. We don't have the place to store for more than about 15 to 20 days of raw material. But depending on the market scenario, we can do forward contracts with our suppliers, or we're exploring the option of stocking wherever the harvest is happening. But overall, our market strategy is always to procure the raw material when it's needed by us through traders, and because even if I were to stock it for a longer period of time, there'll be about 3 rupees to 3.5 rupees in terms of finance cost, storage cost, losses, labor. So sometimes you can pass that on to your supplier as well. So we don't believe in stocking up for 3 months.
Okay. And sir, we are expecting a bumper harvest from Bihar, right? And by now we thought that it will bring down the raw material cost for us. So that hasn't happened?
No, Bihar crop is not due until May. Currently, the crop is due from MP, Rajasthan, and some parts of Jharkhand. So we are expecting a good crop. There have been some untimely rains which have delayed the harvest. So post Diwali, we're expecting the harvest to come into the mandis.
And that should bring down the price of maize somewhat. Is that we are hoping for?
Yeah. So, but even if it decreases, we don't expect a huge decrease so it should be similar from Q1 numbers or Q2 numbers of this financial year.
Okay. That's all. Thanks a lot for your time, and thanks a lot to you and your team for the great work. Thank you.
Thank you.
Yeah. Thanks so much. The next question is from the line of Bhavesh, an investor. Please go ahead.
Good evening, sir. Congratulations on a good set of numbers. So my first question is with respect to your order book, the ethanol order book. Just wanted to understand what is the current value of the order book?
The value in terms of rupee?
Yeah, rupees.
I don't have the number at the top of my head.
Because the company updates it on the BSE website. So this year, there was just a percentage uploaded, like there was an increase in by 18% approximately. So
the total allocation we have is about 18.25 crores.
Okay.
If I were to even so this should be around 1,300 crores.
1,300 crores. Okay. So we'll be getting more orders, or this is the final order book for the?
This is the initial order book, but throughout the year, the OMCs do keep on giving increased requirement depending on their blending percentages and demand. So depending on ENA demand and what the OMCs release in the middle of the year, it could increase from here.
Perfect. And what about the debt reduction? Like it's gone down by 100 crores this quarter. So do we expect another 100 crores in the next 6 months to 1 year time?
See, working capital was not utilized much this quarter, and so the reduction there. Moving forward, once we shut down our edible oil business, we will have to decrease our working capital requirement by around 3 crores. So that will reduce our overall debt as well. But working capital for requirement for our distillery business can increase depending on how much raw material we're sitting on.
Okay. And my final question is with regards to your stock, like your share. It is currently categorized under the edible oil segment, but most of your revenue is coming from the distillery segment. So have you thought of applying or to the stock exchanges and requesting them to recategorize you from the edible oil to distillery segment, because you have been getting a PE of 15 to 20, which is very lower compared to the distillery stocks. So have you thought about it?
We are working on it. It's a slow process. It is in our knowledge. So let's see how long it takes for that to be updated.
Great. Thank you so much, and all the best for your coming quarters. Thank you.
Thank you so much. As there are no further questions, on behalf of InCred Equities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you so much.